Hey Armando, this is Ryan with TrendLizard.com. I hope you're doing well. You sent me an email asking for some analysis on XME, which is the Spider's S&P Metals and Mining ETF, one that we've looked at before, but we'll get started here. It was incepted back in 2006. As you know, it's been on kind of an up and down ride since that time. What we've focused on in the past times that we've taken a look at this is the decline off the 2011 high. So looking at this decline here, we've indicated, look, this has to be a three-wave move. That's important because three-wave moves are counter-trend moves, and that has to mean that whatever started here in 2016 is something larger, and it's obviously proven to be as much as it's moved from however low it was back here in early 2016 up to 35 in early 2017. But it's had a little bit of a rough ride in 2017 after it hit that high, and it's pulled back quite a bit, probably about 6 points or so to its current position. So we're going to take a closer look at what all this means. But again, on the longer term time frame, the fact that the decline off the 2011 high into the 2016 low is one big three-wave move is still bullish overall. So let's go ahead and zoom in here. This takes a closer look at the three-wave decline. There's just no other way to label it. This looks like a big counter trend down move, despite the fact that it moved from 72.5 down to 12.5. So regardless, it's a counter trend move, and that's a bullish thing overall. So I had indicated previously that a move above 31 was bullish and proved that this was a counter trend move, and that is still the case. So our main focus at this point is the advance off the 2016 low. It hasn't been super clean. It's had some big pullbacks at potentially unopportune times, including the current one. And so it's not a super easy move to label and explain via the Elliott wave pattern, but we're going to take a closer look anyway and look at the different ways that you can label this move here. So this is the labeling that we've been using in the previous times that we've analyzed it. The initial up leg off the 2016 low was just a beautiful move, very trendy, a five-wave move. That's what trendy moves are. After the first pullback, it's kind of been a little bit rougher going since then. It certainly worked its way higher, but it's had more frequent pullbacks that continually overlap with the previous highs. So previously I'd indicated that 2850 was an important level. And it is. It moved a bit below 2850, and that certainly concerns me, and it makes me think whatever pullback began in 2017 is going to be a larger move before it's said and done. So on a near-term to even mid-term time frame, I don't think this is the right time to own XME, and that's why I'd used that level 2850 as a stop the previous times we've discussed this stock. This labeling of the pattern is no longer possible. This is a very bullish labeling that had XME continuing higher, but the fact that it's broken down and been able to recover off the 2017 high looks near and midterm bearish for XME. So we have to find a different way to label this move. I do still think it's a trendy move, but it's obviously not one that's still in progress as labeled here. So here's a couple other labelings that I've tried to put on this advance to see how we can better explain what's going on. So this is another explanation. It suggests that the fourth wave of the five-wave advance, shown in black, is just now underway in 2017. This labeling allows for additional weakness down to about 25 before XME turns back up and resumes its uptrend. I would think that it would still continue down from here under this labeling. So the door would be open for additional weakness under this labeling. Another possibility is that this was some type of leading diagonal that completed, and so then this pullback is an even larger degree pullback that's going to head all the way down from, say, 20 to 26 or somewhere in that area. So any possible way that I can find to label this advance off the 2016 low is calling for some type of larger pullback. And if I look closer at the nature of this decline, it does look like it's going to continue lower before it's over. So my expectation on any larger time frame is that it's going to continue higher. But when you look at the shorter time frames after XME moved below 2850, it opens up the door to a larger pullback, as I had warned before, and that certainly seems to be the case, where we're at least going to get a move deeper down into this yellow area here, if not an even deeper pullback. So my recommendation would be to be out of XME if you're not already. Allow a larger pullback to form. Look for signs of strength to emerge before you buy it again. But right now it does look like whatever started off the 2017 high is going to continue and keep XME suppressed for the foreseeable future. So I hope that's helpful, Armando. Have a wonderful evening. We'll talk to you soon. Take care.